So you have an accepted offer on the purchase of your property. Congratulations. So what's next? My name is Faisal Nurani, and I've put together this video to take you through the processes of closing your purchase and to give you a general description of closing costs to expect. First, you will need to tell some people who your lawyer is, with the first being your realtor, so that their office can send us copies of your contract together with all of the other documents and addendums, which we will review in detail. If you're relying on mortgage financing, you will need to tell your bank or mortgage broker so we can receive what are called mortgage instructions, which inform us how to structure and paper the mortgage and other security you will need in order to complete your purchase. Next, you will receive our intake questionnaire, where we pose specific questions that we will need in order to set up your file and draft those closing documents. And finally, once we have everything together, we will meet with you in person in order to review and physically witness those closing documents and collect the balance of funds in our trust account. One of those closing documents is called the Buyer Statement of Adjustments, which sets out all of the closing costs which are offset against credits, such as the deposit which you have already paid. Let's talk a little bit more about those closing costs. Unless you fall under an exemption, property transfer tax is a one-time tax paid at closing and is based on the purchase price of your property. The tax is calculated as 1% of the first $200,000, 2% on the amount greater than $200,000, and up to including $2 million, and 3% on the amounts above $2 million. In addition, if the property is worth more than $3 million, a further 2% tax is applied. Goods and services tax is generally exempt in the purchase of used residential property. But if you are buying new housing or housing that has never been lived in, GST will likely apply. Property tax adjustments. Property taxes are calculated on a calendar year basis, i.e. January 1st to December 31st in British Columbia, and are adjusted for on a proportional basis between the buyer and seller. Next, document orders and filing fees. We will need to order specific documents such as a tax certificate, as well as attend to filing documents in the land title office, which have corresponding costs. If you're getting a mortgage, your lender will require that you purchase a title insurance policy to protect the lender against title defects and unregistered charges associated with their mortgage security. If you're buying into a strata, there are two further closing costs to be aware of. First, the strata insurance certificate. Every strata corporation is required to have an insurance policy which covers all of the common property of the development. In turn, that insurance policy will need to name a first loss payee, which will be your lender if you are getting a mortgage, or else yourself as the owner. Arranging for the strata insurance certificate carries a fee charged by the insurance brokerage. And second, strata fees. Stratas will charge for ordering forms and, as we all know, have maintenance fees associated. I hope this video was helpful, and we look forward to helping you with your purchase.